Hello guys, welcome back to another GameStop video. We did do an analysis on this before the earnings released during the day today. Now the earnings has released, so we're going to quickly go through because the levels did play out quite well. And again, these are things to take for future references on how this could be a trading opportunity. So you can see all the lines we went through in the analysis videos are still here. We've just made them now colored and a bit clearer to understand. So now we're going to run through all of this and kind of show you what these mean. So obviously it usually comes out 5 minutes after the close. 5 minutes comes out and you can see we're sitting on this second deviation. Obviously when we're sitting on a level, we're not going to be paying too much attention to that on the release because we're going to move either way. Now, like we said, we don't know which way we're going to move, but overall we were more likely to be bearish on this release. And the reason for that was if we go on to the longer term chart, one thing that I've seen time and time again is the majority of the time, again, not saying 80%, probably about 60, maybe 70% of the time, if we are overbought on a stock, the earnings tend to have a negative effect. And the reason for that is unless they're really outstanding, people still can't justify buying into this stock. So that's why when we get a downward reaction, it's going to be a lot stronger when we're already overbought. Again, we went through this all in the video and we did kind of point out these levels. And we did say if we move to the downside, the options were pricing in about a 4-point move. We did say it'd probably be a tiny bit more if it's to the downside. And in this case, you can see we're down about 5-6 points. So again, everything we kind of said came out as planned. And again, we are overbought. On the 1 year, only slightly on the 1 year. We can see this is where our first deviation is right here. So we're only slightly overbought on the 1 year, but on the 6 month, we are quite overbought. When you come into that second deviation or above, we consider this quite, strongly overbought. Something that's when I don't look to be short bias. Whether it's on the 6 month or the 1 year, that doesn't really matter. If one of them is above the 6 month, to me, that's too overbought to really buy a stock. So when I see it overbought, again, we expect more likely to be a negative move. And then when we get that negative move, we expect it to be stronger than if it was an upside move. Now, that was firstly one of the things we went through is, again, probably going to sell off and it will probably be a bigger move than the options were pricing in, which was only 4.5 points. Now, how did these levels play out? Because that's another key thing. Now, one of the key things to watch for earnings, again, on this stock and most other stocks, again, they have to be quite liquid names, but, any big kind of household name that which has a lot of volume, when you see the initial release come out, unless they are very, very strong earnings, you will tend to see a fade on that first minute. And what we mean by that is, again, the candle opened here, we shot up, we tested this level, instantly faded. So that's one trade opportunity. Again, we see this quite regularly. Then what happens is you tend to get that second move. And again, where do we come into? The range of these levels basically caught the absolute bottom of that. And then again, faded straight back up. Now, this is a common appearance, just something I wanted to point out, so you can watch this in future reference. Now, a good trading opportunity is usually going to be that first move. So if it moves for ups first, as soon as it comes into a level, potentially looking to short, that can be a good opportunity. Usually that second move, I don't like to trade. And the reason for that is, yes, a lot of the time you'll get this double fade, but sometimes the announcement comes out, it pops up, people lock in their profits, or if people are holding it long, it might take out their profits. Now their earnings, especially if it's algorithm based, they can see that these earnings potentially weren't as good, so then you get that move to the downside, and sometimes that can be a continuation. So if you take on that second trade, there's a lot more risk. But again, the targets were hit, which is quite key. Again, if we're watching it in future, these are the levels to be paying attention to. If we hit these potential trade opportunities, again, it's going to move quick. So either we have to have limits out with stops kind of to execute instantly, because obviously if it executes and flies past, you kind of don't want to be sitting in something like that. So it can just be having a limit order out, or again, if we can try and execute it manually, we can try. But again, we're going to be taking on that risk in case it kind of flashes all the way down by the time we hit the order button. And then now that is kind of covering that first 1 minute, which is usually going to be the main trading opportunity. Now what we can see on the key next move is, again, we broke down to that downside, retesting a level. Like we say, if we retest a level, we're likely to break. So it tested it here for the first time, we're retesting it now, so we're more likely to break. We got that breakdown, and then what did we get? We got that retest that we talk about as soon as you get that retest, we know this is most likely going to be bearish as long as this level can hold. So two ways you can look at this. If you're not great at maybe seeing if selling pressure is coming in, just waiting for that break of a low. If you get that, then we are probably going to continue further down. If you can kind of see it a bit quicker, you can kind of see, okay, sellers are starting to step in here, then obviously we can try and catch that move a bit earlier. And again, we can still have a tight stop. If we see sellers stepping in, we can have a stop kind of just above here. Still keep a tight stop, trying to capture that downward move again. Now again, it's been about an hour, about 50 minutes since the release. We're currently sitting at $21. So the main focus is going to be now, do we continue up or down? More likely than not, we will continue down that bit further. And the reason I say that is that around $19.50 or $19.60, we have our statistical mean. Again, this is the 6 month level. If the level's dashed, then it's 6 month. If the level's whole, we do that as a 1 year. So as we come into this level, this is where the stock or GameStop is considered fair value. So even, relatively close, this is where if we're looking to invest in it, if you're long bias, getting in at this value or below is what makes sense. If you're buying above this level, it's usually considered a bit more overbought. And again, this is usually where we look to lock in profits or start doing short bias. So now we come down to fair value on this release. It's going to mean there probably isn't going to be some trading opportunities, at least from how I look at stocks, for a while, because obviously I don't want to be trading a stock at this fair value. And considering now we've gone through these levels relatively recently, I don't want to trade these right away. So the next trading opportunity I can see, if we go to the upside, I would be patient. I'd wait for $29 or above, look at it short bias. But again, probably not going to hit that all that soon. And then if we go to the downside, we do have $17.20. That's our other statistical mean. So that range is fair value. Again, if I'm a trader, not looking to trade that value at all. If I'm an investor, getting in at this value or below is what we look for. So again, those are key levels. So the main focus now is if we go to the upside, I am short bias if we go to the upside, obviously, but I'm being patient till $29. Now, if we break to the downside, we'll quickly cover a support level, and that will be $16.30. And again, we'll put these all dashed just so you know how we kind of do this. And again, the left chart is a 6 month. So we have our dashed first deviation here. So that would be the first area we look to buy from a trading perspective. And obviously, if we're looking at it from an investment, that would also be another good or key level. If we break lower, we then have $13.15. And just to go one level lower, we then have $11, which is our first deviation on the 1 year. So they're going to be our 3 downside targets. So if the earnings push to the downside, again, not looking to trade that value there. Potentially could look to start playing it from that $16.30, but considering the move, or our target would only be $17.20, it keeps the upside limited. We're only looking at about 85 cents. So unless you're risking less than that, probably not going to make sense for a trade. So if I'm looking to get a bounce, I'm going to have to be patient. I'm going to have to wait for $13.14. So that would require a 52-week low to be able to push to those sort of levels. So whether we get there, again, that's not for us to predict. It's just to us to react if we can get there. So that's kind of where I'm paying attention to the stock to the downside. From there, looking at it long bias, potentially looking for a bounce play. And if we go to the upside, again, these could be trading levels because they are key resistances, but considering how recently we hit them, I'm probably not going to touch them. Same with that 26, potentially could trade it with small size, but I would probably just be patient and wait for more of an overbought area such as $29. And as well, then we hit that third deviation. Third deviation is always key. 99.7% of the data should trade below that third deviation. So knowing that if we come to that level, a really high probability of a reversal. So that's really what I'm more patient for, because there's so many stocks in the stock market. To me, there's no point forcing a trade on GameStop if there's going to be a better opportunity elsewhere. So that was the breakdown on GameStop. I hope you enjoyed the video. If you did, why not drop a like and subscribe, and check out this video here.